Hello everyone, this is Jay, and in today's video I wanted to review one stock and one ETF on the consumer staples sector, which it is down at the moment, just like a lot of other sectors, as you guys noticed. And in this sector, I actually own three different stocks. I do not own an ETF that is based on that sector, but I do own three stocks, and this takes 12% of my portfolio right now. But before we start, please don't forget to hit that like button. I really appreciate all the subscribers, all the new subscribers that I continue to join me. So really appreciate it. Please don't forget to hit that like button, and let's go. So in my portfolio, three of the stocks that I have in the consumer staples sector is PG, Procter & Gamble, which I'm up actually 6.83%. I bought it when it was $136 the share, around that price. And my next one is Coca-Cola, ticker symbol KO. As you guys know, it is down at the moment, and a lot of people have been taking advantage of that. I am down 6%. And my third position, which it was one of the latest one, was ticker symbol KVUE for Kenvue, which is the spin-off from Johnson & Johnson, and I'm down actually 20%. So that one definitely I could have waited. I like that company. I like a lot of the brands, and that's why I added it. All right, so let's go into the first stock that I wanted. I looked at this stock. It's definitely one very popular, has a lot of popular brands, and definitely is one that it has a good valuation. It's at a good price and everything. And this one is ticker symbol CL for Colgate Palmolive company. And as you guys can see here, it is down right now year to date 8.91%, and and it's actually a little bit up in the last day or two. Because it had closed on October 11 around $68.87, and it is now at $72. But I think it is still at a very, very good price. As you guys can see, that 52-week range, the 52-week low is $67.62, and 52-week high is $82.09. So it's definitely closer to that 52-week low. That PE is at 22.86. That dividend rate is $1.92 per share per year, and that yield is at 2.66% right now. This company has a market value of $58.65 billion. So this is definitely a company that has been out there for a very long time. It was founded in 1806 in the year 1806. So, and this company, as you guys can see, the revenue is just continues to grow every year. In 2021, 17.42 billion, and then in 2022, 17.97 billion. So they have some growth. And you guys can see the estimates right here for 2023, around $19 billion. Now, if we continue to go down, and let's go check that dividend. So the market cap, as I've said before, 58.65 billion. Total debt 8.99 billion, but cash on hand 1.09 billion dollars. And that dividend yield, as I said before, 2.66%. That payout ratio, it is getting a little bit higher at 62.79%, but it is still good. It is still safe in my in my opinion, to be honest. And the 5-year growth CAGR, this is the only thing that I don't, that have me a little bit not, that's why I haven't added this company. And it's only 2.99% on that 5-year growth CAGR. Years of growth, of course, 59 years. So this is a dividend king right here. It has been consistently paying that dividend for 59 years. And you're still able to pick up some shares before the ex-dividend date, so you can get paid on November 15. The ex-dividend date is on 10/20, and I am recording this video on Tuesday, October 17. So you still have about 2 more days So you gotta buy them day before the ex-dividend date. So on 10/19, you have to buy it so you can get that dividend, that nice dividend. And as you guys can see here, that dividend growth history, which is my favorite chart every time I look at it. So from 2014, 15, 16. Now let's go from 2018 is $1.66 per share per year. 2019 $1.71 per share per year. 2020 $1.75. 2021 $1.79. In 2022 $1.86. So they definitely had a very good growth from 2021 to 2022. So this one is definitely a company that if you own, it looks like you'll be getting a nice dividend, 2.66%, and it will be consistent as of right now. So definitely it is a company that is very, very popular. Let's check some other brands. As you guys can see here, you cannot go wrong with these brands. Of course, Colgate, Palmolive, Protex, Speed Stick. I know you guys seen that. Soft Soap, Suavitel, Lady Speed Stick, Palmolive, Irish Spring. I know that soap is everywhere. Not sure about these brands. I haven't seen them around here, but Ajax, definitely one that everybody uses. There's just so many brands. Fabuloso, that's definitely a very, very popular one. I definitely use that one at home. So some of these brands I use them at home too. But it is definitely a very, very good stock. And then let's just say if you don't feel confident about owning this company only, or just own some single companies like I do with Procter & Gamble, KO, and Kenvue, then you could just go with, of course, the Vanguard Consumer Staples Index Fund ETF shares, ticker symbol VDC. And right now, in the last 6 months, it is down 8.41%. So you can definitely pick it up at a cheaper price right now. And the expense ratio is only 0.10%, which is pretty much $10 a year for every $10,000 invested. So that's definitely a very good expense ratio in my opinion. Of course, this is not a financial advice, guys. You guys always got to do your research, okay? Dividend yield is 2.64%, and that dividend rate is $4.70 per share per year. So the assets under management are $6.35 billion. And as you guys can see here, all the analysts are saying buy. This is a must buy right now. And if you guys see here the returns for this company, in price return only, in the last 10 years, if you held it in the last 10 years, you would have had a 67.68%. And if you reinvested that dividend, that total return in the last 10 years, 117.86%. So definitely it is a company, an ETF that if you hold for a very long time, it looks like it will definitely pay off. And if you see right here also that dividend yield is 2.64, which is almost the same as Colgate. But that dividend year CAGR, the growth CAGR, is 5.55%. So definitely higher than that Colgate company or Colgate brand. The ex-dividend date was in September, so you will need to buy it now, and then so you can get paid in December, I'm sure, which is probably gonna be the next payout. But as you guys can see here, these top 10 holdings, Procter & Gamble, which I have 12%. So I'm definitely glad that I own it. See, if it's the first stock and with the most percentage of holding in an ETF like this one from Vanguard, then definitely it is a very good company. Second holding is Costco at 8.73%. That's definitely one that I don't know. I would like to have it, but I'm okay with the holdings that I have right now. Walmart, PepsiCo. PepsiCo is down right now. I think it was like around $160. We should take a look actually in a second. But Coca-Cola, of course, I own that one. My favorite, my family's favorite also. Philip Morris International, Mondelez, Altria Group, Colgate Palmolive, of course, that's one of the holdings in there, and Constellation Brands. So this ETF has a total of 108 holdings, so you'll definitely be very diversified in that consumer staples. And as you guys can see here, the dividend growth, it looks like it grows very well from 2014, $2.42 a year per share to $3.29 in 2015. And then it kind of went down a little bit in 2016. Then it went back up to $3.68. Then 2018, $3.65. 2019, $3.94. 2020, $4.35. 2021, $4.28. And 2022, $4.54. So if you want to not do your research, you just want to do something with a set it and forget it mentality, like I do sometimes, then this is definitely a great ETF. Not advice, okay? No financial advice. Do your research, please. But definitely one company, one ETF that is looking very, very good right now. Let's go right here so we can take a look at Pepsi very quickly. Because I think it was down even further now. And if you guys see here, it is down 7.16%. So $160 right now, the share price. Wow, that's definitely is going down. It's taking a real dip. So the last time it was around $160. I'm not sure if it even hit right here in October 2022. It looks like it was right here around June 21st, 2022. So you can get it right now at the price of June of 2022. So that's definitely at a good price right now, in my opinion. No financial advice, guys. Do your research. But that 52-week range is very, very close to that $155. Market cap $221 billion, and the yield right now is at 3.14%. I remember not long ago it was at 2 point something percent. So right now you can get it over 3%. So definitely a company that you just do your research with it and see if you like it. So yeah, so pretty much that's what I wanted to bring you guys. Definitely one stock and one ETF. You can definitely research both, and I even gave you Pepsi so you could also research it. It looks like it's definitely at a good valuation. I should have done the research on that one instead, or made the video on Pepsi, actually, PepsiCo. It's definitely looking very, very good at $160. I'm not pumping the stock, okay? I'm not pumping any of these. I just saw them and I wanted to definitely share it with you guys, just in case it's something that was not in your radar. All right. Please let me know in the comment section. Do you own any of these? Do you own Colgate Palmolive? Do you own that Vanguard ETF, VDC? I think it definitely has some good. Definitely has very good holdings, and it has some pretty good dividend yield. So all right, I hope you guys are having a good day, and have a good day also. So I'll definitely be seeing you on the next video, and please don't forget to hit that like button, okay? Thank you so much. I really appreciate all the support. Thank you, guys. Disclaimer: I am not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.